Sufyan, good morning.
Good morning, everyone.
Good to see everybody today. Happy Sunday. We'll get started here in just a couple minutes. Kate, good morning.
Morning.
Morning, Abia. Just give another 2 minutes or so, and then we'll get started. Denise, good morning. Looks like we might have a little bit of a smaller turnout today. So if y'all want, we can do some questions and stuff at the end, or come on and show some of your charts and or go over some specific topics if y'all like kind of have a more personal day here. Just one more minute and I'll get started. Everybody hear me okay? Thanks, Patrick. All right, so we'll go ahead and jump right into it then. Everyone had a good week in the markets this past week. I saw a couple assignment submissions, so good to see people were finding success identifying a silver bullet. Alan, good morning. Good to see you. All right. Can everybody see my screen? Sweet. All right, so we'll get started with the economic calendar then. Not a whole lot going on Monday. We do have a small news announcement at 8:30, Empire State Manufacturing Index. Normally, Mondays are typically our consolidation sort of day, which I think would be likely going into this week as well, just given the larger expansion that we had on Friday's action. So from expansion, we see consolidation, right? So the following day, we'd likely see that consolidation. So that will be Monday. Not a whole lot of news, not a lot moving the market around. So ideally, if you do decide to participate this week, you'll want to hold that participation toward Tuesday, Wednesday, Thursday, and even Friday. Tuesday, we do have retail sales and industrial production at 8:30 and 9:15. So those are nice news drivers there. And then business inventories in the housing market at 10. Those are smaller ones, but you may still be able to see some nice volatility there. And that does align with your silver bullet. So you can potentially see a move occurring there to set up that trade. On Wednesday, housing permits and petroleum status report, 8:30 and 10:30. Just watch out for those. And then there's beige book at 2 p.m. It doesn't show this as a red folder news event on Econoday, but this can be a very quick mover. So I would just be cautious if you're in the market around this time. It may not be best to hold a trade into this 2 p.m. news release. And Thursday, jobless claims, 8:30. Manufacturing index 8:30, existing home sales at 10, and then Powell is speaking at 12 p.m. So it may be best, I don't know how long he speaks for on this day, but I would say it could be best to hold your trading until after Powell has spoken. A lot of times when we have him speaking around lunchtime or in the afternoon, the morning session can be a lot of seek and destroy or just consolidation, and this is an area where it's easy to get chopped up, especially as a new trader. So I will be avoiding this morning myself and holding any trades till after if I do decide to trade a day. There's a lot of speakers following in as well, so they're not really likely to move the market the way his name there does, but yeah, just be cautious of that. And then Friday, doesn't look like we have any news, just a couple of speakers, so could just be a typical Friday. Any questions on the economic calendar before we go ahead and jump into the charts?
Quick question. You don't give any weights to Netflix and Tesla reporting in terms of how the algo will behave on those big
I hadn't looked at earnings releases actually. Are they releasing before or after the market?
Wednesday after the market, after hours. It's Netflix and Tesla.
Yeah. Well, I'm not holding any trades beyond the close, so I probably wouldn't give too much weight to that. But it's possible to see some movement occurring from that in the after hours, and that may set up something for the following day. But yeah, do be cautious of that if you are holding anything through the close. Any other questions, or we'll go ahead and jump into dollar? All right. So we'll start with the dollar here. Start on the monthly chart. Okay, so now dollar on the monthly chart. We've come down into this BISI. I think nearly filled it here, but not completely, and are now working up higher. There's still a large portion of this SIBI remaining, so it's a possible area to continue drawing into if price is going to continue higher, which I am expecting at least toward the early part of this week. So Here on the weekly chart, you can see this past week, we poked down here into this weekly BISI. We've now traded back above the breaker as well that we've been talking about on the weekly chart, right? High, low, high, reaching through there, utilizing it here and here to trade lower down into the sell side. And now having that shift in market structure back above these highs. And then you can see every discount array is being utilized to trade higher, right? So now we've reached up into that weekly city, just tapping it right here. And then using this little weekly BISI down here to trade into this week. And now working our way back up toward the buy side. So I would likely expect the next potential draw to be this previous week's high right up here. And then we do have buy side resting above the November 21st week's high. And then there's a large portion of the city remaining as well. So you can look for here, here, and then the consequent encroachment of this city if we do continue to draw higher. If we do get closure back below this BISI, then there's some lower prices that we could potentially look for, which is this BISI right here. And then you just start looking at previous week's lows and move down, right? For now, I am maintaining that bullish bias on the dollar though. We'll jump into the daily chart. So you can see that same buy side target here. There's a small city right here, which has already been filled right here. So balanced price range as we traded up and then traded back down away from it. Now you could expect that if we are going to hold up in here, then we wouldn't likely trade any higher than the midpoint of this city right here. So especially if you do start to see closure through this midpoint, then you can expect the buy side to trade up here and then this city up as well. Okay. Here, so zooming a little closer on the daily, you can see we had this little BISI remaining here, traded and rebalanced as we traded away from it right there. So redelivery, and then as we trade away, it comes a balanced price range. Here we traded back down through it just to tap into this down close candle, order block right there, and a stop run on any sell stops that were brought up, trailed up below this low. And now you can see that we are using this weekly BISI right here. That's the separation between this candle's high and this candle's low. Redelivering it and then trading away from it. So now I'm treating this as that balanced price range. And so I wouldn't want price to trade and close any lower than the midpoint of this weekly BISI, this green box right here, if we are going to continue higher up into buy side on the short term. So that's kind of my point at which I would negate that idea if we do start to get closure below the midpoint of this. Otherwise, we have this little daily BISI right here, which can be utilized. And then note the consequent encroachment of the wick if we're going to be heavy-handed to the upside as well. So note the consequent encroachment of this wick, BISI right here. And then you could potentially utilize the high end of this weekly breaker as well if we do get closure above. And then we'll just be looking for a buy side up here. You can mark out this last up close candle here as an order block, but if we are going to trade up into the buy side, I don't expect that to be a little bit of a speed bump potentially on the way there. So not something that would necessarily reverse the stall. Yep, and then just watching buy side, watching this consequent encroachment of this old daily city. And if we do get closure above there, watching buy side here above November 21st, and then watching this daily city up there. Any questions on dollar?
Thanks, Henry, for doing this. One question I have is on a day-to-day, intraday trading basis, do you look at what dollar is doing to take action on NQES, and what time frame do you look at it to make that decision?
Yeah, that's a good question. I do watch it intraday. The two are, you're going to see the best moves occur when the two are working very obviously inversely, right? So like dollar running higher, yes, and NASDAQ running lower, or vice versa. When you
Yep.
see consolidation or seek and destroy occurring on DXY, that's a good hint that you may likely see the same on the indices, and it's not the best time to participate. So I like to see when there's a clear and obvious draw on dollar and we're working toward that. Those are going to be typically the best times to participate on ES and EQ. So I'll just watch on the lower time frames for the most part, or mark my charts out just like I would for ES and NASDAQ, and then I'll typically watch on like the 15-minute or the 5-minute chart dollar.
Okay, thanks.
Any other questions on dollar? And we'll go ahead and jump into ES next. Okay. All right, here we go. ES. Start with monthly chart. So you can see here on the monthly chart, in September, we did get that closure just slightly below this monthly BISI right here. And then here, as the month has began, we've gone up and traded back into this wick right here and into the premium side of this BISI, and are now trading back off of that right there. So I just keep an eye on the opening price of this monthly candle. You can go ahead and mark that out right there. You could potentially use that as a power to 3 idea if we're going to continue to trade lower on the indices. I'll drop that into the weekly chart right here. So here on the weekly, we have this larger city right here, also marking out this order block here. It's 2 consecutive up close candles. You can see how we traded right there, almost to the consequent encroachment of the city, and just up into the order block. Fell a little bit shy of the body of it, but we did trade into the wick there. Also noting this old BISI back here, which you can take across. We traded into there. And now coming off of there, right? So to me, I'm not seeing anything on ES yet that's going to tell me we're trading up higher quite yet. If we do trade up and get closure above the midpoint of the city, then we can potentially start looking for higher prices up here. But until then, I'm going to continue holding this longer term bearish bias, looking down for sell side down here under this low, and then below these lows, potentially down into here in this area. Okay. On the daily chart, here we have this daily city inside of the weekly city. So you can see we're just remaining in the lower portion of the weekly city, trading up to and holding the consequent encroachment of the daily city right here. So this candle's low, this candle's high. Take your fib, mark out the midpoint, and see the respective the bodies hold for the midpoint there. So this is just a mohawk that we talked about last week, right? Trading above higher, running stops on these previous daily candles, and then trading lower, but still showing respect for this old inefficiency. Okay. I'll take that up there. So now we're trading back down into the monthly opening price. We do have these 2 consecutive down close candles right here, which you could treat as your order block. But if we are going to continue trading lower, I would like to see these only as a bit of a speed bump, so we cut through relatively easily, right? Not a lot of holding up here and getting higher back up into this range. Ideally, we would see it move quickly down through this area. Note as well, you do have, it's not as easy to see here, but there was a volume imbalance created on lower time frames here. This was your new week opening gap, but you can see this candle's close, and then this candle's open down here. So you have that separation right there. And that's actually where we made the low a day on Friday. Right? So keep note of these things when you're marking out your charts. These can be important levels to watch for. As you can see that this is that opening is a volume imbalance, right? And then trading through it, buy side. And so now we could potentially need to see sell side delivery in that area. Let me see if there's anything else to mark out in terms of the premium mitigation block right here. So we talk about breakers being like here, a low, a high, a lower low, and then trading through. So you could see this as your breaker right here. Mitigation would be a low, or excuse me, a high, a low, a lower high, and then trading through there. So instead of a higher high, you see a lower high. So that would be your mitigation right there, drawing that out in confluence with this city on the daily and the weekly order block. And we're trading lower off of there. So a lot of confluence in that premium area as we trade back down into discount. I would take your fib here as well and mark out the low of the daily range up to the high, find your equilibrium. You're at 43.33. So note any reactions that's sort of occurring there. If you see this area closed through, then that's a good indication that we'll continue trading down toward the sell side. If you're not seeing closure through this equilibrium, then we could potentially return up into a couple premium arrays up here. The last thing I'll note here, just in terms of premium arrays, are you can look at, now that we're potentially looking at this as curve to trade lower down into sell side, if we do get that trading below the equilibrium, then you can start to look at this side, the buy side of this curve, and look at any previous arrays used here to trade higher as inversion. So let me take that off a second to clear this up. Here, there's a little busy between these candles highs. So now that we're getting closure below it right here, you can drag that out and potentially use that as inversion there. This might clog up the chart a little bit, but just so you can see. There's that. We also have another one right here. Very small one. That exists right there. And then higher up, there's a very small volume imbalance. Okay. So I just keep an eye on these areas as inversion intraday. We are going to continue trading lower to redeliver the sell side of this. So this is where I'd expect is the next target for lower targets, the low end of this volume imbalance, 43.15, and then start looking at previous daily candle lows and then the sell side below here. If we do trade and close back above this high, then we can reach into this city and up into higher prices. But for now, I'm going to continue looking for the sell side. Any questions on ES here?
Yeah, one clarifying question I had is in that purple where you had marked it as daily volume imbalance. I don't see like a gap between the two candles. So why are you treating it as a volume imbalance, that two green candles next to one another?
Yeah, so it's hard to see it on a daily chart. Volume imbalance may not even be the right terminology for that, just given that we do have the body closure. But it's just important to note the separation in the closing and the opening price, because if you go down into a lower time frame, it's not going to be exact because of the settlement. But this is where you see your, hold on, let me make sure that translates lower. Well, I'll make it that color too, so you can see. I drop into the 4 hour, and you can see.
Like more of a new week opening gap.
Yep, this is your new week opening gap right there. So I actually have it marked out on the hourly chart as well, because I wanted to talk about this. New week opening gap here. We've now traded up into the premium arrays. You can see this consolidation occurring right here. So this could appear as your market maker sell model, right? Original consolidation. Here you have accumulation, trading up to a smart money reversal. Here's your breaker, right? High, low, higher, high, trading through, taking that across, utilizing it here and trading lower. So this would be like your low risk sell, here, distribution, and potentially trading down to redeliver the sell side of the new week opening gap. here we had the gap lower, trading the buy side here, but the sell side is yet to be delivered. So you could redeliver the sell side, then treat this as if it moves away from there. So this would be redelivery. And if it moves away, you could treat it as that balanced price range. So we could trade back up into the low or the midpoint and use that as an area for redistribution to trade down toward the original consolidation. Sell side down here. That makes sense?
Yeah.
And then I wanted to note this as well. If you go into your regular trading hours, it's important to look at these gaps as well. So same sort of idea with the new week opening gap here. But if you look at your regular trading hours, we had a gap lower here, which was only delivered on the buy side. So closing here, opening with this candle right here, delivering the buy side, but not a sell side. So keep these levels marked as well as the next areas to be traded to. High, midpoint, and the low right here to deliver the sell side. All right. And then this is the power of three concept, right? So if we're expecting lower prices to trade, and this is our monthly candle open, you can kind of ignore this if you're trading, if you're expecting price to trade lower, but here's the opening price. So you would see everything occurring up here as manipulation. I could, if I'm wrong on this and this is going to trade higher, then you would see this as the manipulation, and this is potentially returning to the open price to trade higher. But as of now, I'm expecting this to continue lower, right? Based on our higher time frame. What's that telling us? Trading below discount range, closing below what we'd expect to the price to use to trade higher, right? Like these old BISIs right here, would expect that to be used to trade higher, but no, we're having the closure below it. We're trading below up close candles. So we can expect that we can likely see lower prices. And so I can anticipate this being the manipulation side of power three. So here's the opening price, trading above it as manipulation. So this is your higher wick on the monthly chart. Right? That wick you see here. That is all of this that's occurring above this purple line. And so you have your accumulation, manipulation above the opening price, and then you can see your distribution lower. And something you can use with that as well is you can take a projection from the high to the opening price. So we're projecting the wick of the monthly candle. And you can see where we reached to. So we have a standard deviation here at -1. And then you can see the alignment with sell side here around -2. Okay. So these can be potential targets as well if you are looking at a longer term scale and using projections to find your targets. Here -1 or 2. I like 2.5 as well. Okay. That's pretty much it for ES, unless anyone has any questions. If we do trade back up above this high and have closure above this city, that's when we can start looking for up here and potentially these relative equal highs up here. Until that happens, if that does happen, then we're looking for sell side. Okay. Any questions on ES?
Are you looking the sell side targets to be hit this week, or what time frame are you looking to get those red lines hit?
I don't like to make any calls on when I'm expecting a target to be reached, because you know, there's always an opportunity for manual manipulation. There's a lot going on in the world, you know, politically right now. And so news can come out at any time. It's important to be cautious in the markets, just like Michael's talked about this past week, with so much going on in the world outside of just the financial markets right now. There's a lot of manipulation bound to happen. I mean, you could literally have a Sunday gap opening open down here or open up here. It's completely possible to see something like that. So be very cautious. And yeah, I don't have a timeline necessarily on seeing it, but I mean, it could take a couple weeks or it could happen within a few days. You know, it just depends on kind of how it develops. But I would think, just based on, if we are going to trade quickly down to here, then you could probably see it within a couple of weeks, but there's no certainty on the time exactly on when it would trade there. If we're looking at just in terms of the yearly calendar, with December sort of resetting, if we are going to trade the sell side first and then have December reset, then I'd say if these sell side targets are going to trade, they could probably trade toward like the middle of November. That would be a possibility. Yeah.
Thank you.
Any other questions on ES? I can touch on NASDAQ really quickly as well. I saw a couple other folks popped in. Axel, good morning. Emmanuel, good morning. Ismail, good morning. And TS, I'm not sure who that is. And Rajan as well. Thanks for being here. I had a question earlier, so that's good. Okay, I'll talk about NASDAQ really quick, and then we can go into some other things. NASDAQ, we've seen it's been the leader on the upside, right? So we talked about this S&T down here as well that we saw on ES and NASDAQ. ES purging the daily lows down here. NASDAQ failing to do so, making a higher low. And we've seen it as the leader throughout all of this price action, with ES taking much deeper into all the inefficiencies and NASDAQ not really doing so. So we could expect those higher prices to trade if NASDAQ, if we were to continue this run up here. We talked about how we were seeing all of this, each of these candles develop, like right here. We had an opening lower, traded through it. Here, another volume imbalance, leaving this busy behind as well. And then another volume imbalance here, leaving another busy behind. So we talked about right here that we could expect a continuation higher on Thursday before a potential turning point. That was this city up here, right? And we tapped right into there, and then had the Thursday reversal, and Friday continuing off into the range and back down into some of these discount arrays. That busy here, the volume imbalance, then another busy right there, and then trading into the new week opening gap. So now you can see this has redelivered the buy side of this weekly SIBI right there. Also tapping into this weekly volume imbalance up here. And now we've traded and closed back below a lot of these arrays. So you can drag out the BISIs and the volume imbalances from this side and look at those as points of inversion. Also, this SIBI right here on the daily chart, you can now treat as a balanced price range if we are going to continue trading lower. So here we had the inefficiency created on the sell side imbalance, buy side inefficiency. So it's inefficient on buy side delivery. It's re-delivering the buy side right here as we trade back up through it. And then it's now been redelivered. It's not rebalanced until we trade away from it. So here, trading back down through and away from it. So now watch the low and watch the midpoint of this city here on the daily chart as potential areas that you could use as premium arrays to trade lower if we're going to continue to trade lower. Watch the down close candle here.
Before
just
before
kinda-
you go, Henry, one quick question on how you explain that balanced price range. So basically, on the CB side, once during the MMBM model, once the buy side has been delivered, until and unless the sell side is re-delivered again, it will not be considered as a BPR. So in order for a BPR, it has to go through a sell buy sell model to complete like 100% of that BPR. Is that correct? Or the inverse, right? Buy, sell, buy.
Right. So I'll draw it out like this.
Okay.
So let's say we trade up here. Or this is not a one. We trade up, and somewhere along the way, create a BISI in here, right? When this trades back down to it, this is only redelivery. If we see it trade right there, that is not a balanced price range. But this is why your draw on liquidity is the most important, right? Because here, if we're trading down to it and trading all the way to the low right here, now it's been fully redelivered. At that point, if we trade up and out from the high, now you can treat that as a balanced price range because it's been redelivered here and rebalanced as it leaves the inefficiency. Now you can watch for respect between the high and the midpoint of this to trade higher. If the stipulation is if you have a higher draw on liquidity. If you don't, then you could see something like this occur. Right? Because this could be your balanced price range as well, right? If we create a BISI right here, and let's say we trade and close below, then it's now been redelivered and rebalanced with a sell side inefficiency. Let's say we create one right here on the sell side. So now we could expect this to act as that balanced price range if we have a lower draw on liquidity. And so now you'd be watching the low and the midpoint as areas to trade lower off of. Does that make sense? So you need both, you need both sides of it to be delivered in order for it to be a balanced price range. But when you, let me see if I can find an example. Maybe on a lower time frame. Like here. You have your city right here. You have your BISI right here. And then note the respect for the midpoint of this area. Because you've traded your sell side here. And now we're trading fully through it. And it is toward the end of the day, so we have potentially a higher objective. And so here, you could, if the objective was still lower, then you could redeliver here, trade back lower, and then treat it as a balanced price range. But since we're trading higher, this is the redelivery, and then we're moving away from it, and we have a higher draw, because we're expecting the end of the day to draw up into here, then you can treat this as that balanced price range, since we have the higher draw. So now trading back down to the high and to the midpoint, and note the respect at those areas. So we trade higher up.
Got it. Thank you.
What else here on NASDAQ? I think that pretty much covers it. So now just keep an eye on these areas as your premium arrays, right? The low and the midpoint of this daily city, and then look at the BISIs and the volume balances in here as areas that you could use to trade lower off of. So potentially something like this is something you could see, right? And how would you align that with your weekly profile? You'd expect that Monday could potentially be a consolidation day. If you want to see lower prices, then we could expect a Tuesday or a Wednesday potential high of the week in this area. Wednesday drawing lower if we have a Tuesday high of the week. Thursday, you could see Thursday continuation, making the opposite end of the range, and then Friday returning back up into that 20 to 30% of the range. Like that, something like that. I'm not saying these are the actual areas we'll trade to, but that's just an idea for a weekly profile. Here on NASDAQ, we'll just note this weekly city as well. Right? We've redelivered the buy side on it here, and now trading back lower on the sell side. So as we see it move away, if we do get price to move below the city, then you'll want to watch the low of this and the midpoint as well as areas to continue to use as premium arrays to trade lower. Okay, and if we do get closure back above, I'd watch at this point, really, I'd watch this last up close candle as your order block, mark out the mean threshold of that. And if we do start to get closure back above there, then you could see buy side trade above here. You could see the rest of this redelivered, and then you could potentially see buy side of it. But otherwise, remaining focused on the sell side. And it's just that higher time frame draw. We now have relative equal lows down here. There's still a large portion of this inefficiency on the weekly chart, which is yet to be redelivered. Okay, we're just watching those areas. Any questions here on the indices? Feel free to come on if you have a question. Check the chat quickly too. Kate, when you have a long wick and then price trades away from it, doesn't that also count as a BPR? The long wick itself means price is traded both sides. Yeah. I mean, you can look at a wick that way in a sense, because when you have a wick trading through an area, then you want to mark out your high and your midpoint of that wick as well to use it as a potential array. So like when you have a wick like this, yeah, let me see if I can, I'm actually gonna look on ES because we can see one that we were treating as wanting to see the consequent encroachment hole. So here, this wick on ES, actually, I'm gonna look at this one here. That wick there on ES, and then note you look at the consequent encroachment of it, how it's nicely respected there to trade lower. We go on a lower time frame. This wick that was created on the daily chart is trading up into old inefficiencies on the lower time frames. Here, and purging some buy side before trading lower. And look at all this action within here. We are trading up, back and forth, and then trading lower. So here we're seeing buy side delivered, sell side delivered, buy side delivered, sell side delivered, again. And you can see that within here as your balanced price range. And then we're trading to it and respecting it right there. I also have the midpoint of the wick right there, which is being respected. So yeah, that's good to know as well, Kate. Any other last questions here? And we'll go ahead and jump into some trades. Okay. Cool. So Carson did a live trading session this week. If you all want to go ahead and check out his trade, you can do that. It's being shared on the YouTube channel and on First Hand Social. So you can go in there and check that out. He traded the silver bullet setup. It was pretty nice delivery, and that's a good one to watch as an example of this. I didn't end up taking my trades until Friday between the 2 and 3 p.m. hour because I was trading my my own accounts prior to that. But here we already had this larger delivery. Or look at the hourly chart here, already delivering down into the unique opening gap and sell side down here below these lows. So here that 2 to 3 p.m. hour was really just a bit of consolidation. I jumped down into the 15-second chart to try and trade off of it, but since it was really just a consolidation hour.
Hey Henry, sorry to cut you off, but
Oh, go ahead, Ismail.
to your screen.
Can't see it.
Yeah, you're still sharing the hourly chart on ES.
Oh, all right. Let me. Thanks for letting me know. Screen to. Can you see it? Okay, good. So here I was looking for the silver bullet idea between 2 and 3. And you can see this trade. Speed it up here. So 2 and 3 p.m. in the afternoon, that's when the silver bullets can occur. Here on the 15-minute chart, you can see that we have a SIBI right here, which I'm marking out with this red box. So I'm waiting for price to deliver into there. It's confluence with the new week open gap high. And then I was looking for sell side to trade down here. But we ended up just having consolidation into the afternoon. So not a whole lot of movement here. But you can see as we traded up into there, we're running out the buy side, dropping back down and leaving an inefficiency. So that's where I'm getting short. And then I'm marking out the new week opening gap low as my terminus. I'm taking some projections there using the wick of that hourly candle. Note the respect there for that midpoint of the city, which is the same as that new week opening gap high. And this is all just time distortion here. Just waiting for price to displace. Then we're dropping lower. You can see we hit right there the 1 standard deviation of that wick. Trading back up into the city one more time. And you can see I'm not moving my stop anywhere because I'm just allowing that to trade. See, each time that it's running up in here, that's okay because it's just running out the buy side. It's running out any sell stops before it can drop lower. And then here we get that displacement lower. At this point, I'm thinking, okay, we're ready to potentially make the move down here. So I'm only taking one partial off right there. I had a 5 contract position trading the micros, so I take one off there. And then at this point, I don't want it coming back up here again. So here, as we run out these highs, I'm expecting it to move back lower here, but we don't get that. We trade above right here. And at this point, I could have cut the position right there, but it's not out even there. And then you can see we're trading back above. So you can see this whole hour is just consolidation, looking at this hourly candle. And then I give it one more shot, trying the same idea. Trading above the buy side here. Above the buy side, back into that 15-minute city, waiting for the displacement lower. And a city created right there. I'm putting my stop above both cities, allowing for both of them to trade. And I'm getting short in the first one. Looking for this area to trade again. And you can see just the fractal nature of price, right? This is a 15-second chart, but everything works the same way it does on your 1 minute, your 5 minute, your 15-minute, your hourly, your daily chart. Everything works exactly the same, right? So this is just trading up into a city. You're able to sell short in there. Buy side has already been purged, and then expecting sell side to trade down here. Now I'm marking out these equal lows. Be mindful of that. Still just utilizing the city up here. And like I said, I'm allowing both of these to trade. So we have this city, and there's a higher one right here. You have to allow both in your stop loss. Redelivering it, trading away from it. So now expecting it to work as the balanced price range, right? So I'm looking at the low, I'm looking at the midpoint. Note the respect for the low right there, the candle bodies all holding it, and then dropping into the equal lows and taking a partial right there. And at this point, I want to see it move quickly. One more plunge below the low. And I wanted to see this run right through. And we don't see it at that point. So as I start to see that idea fail, I'm just going to break even here. And you can see that the rest of this hour, well, I didn't catch the full thing, but the rest of it is just consolidation up until 3 p.m. And then we end up trading higher back above buy side going into the end of the day. So there was that little city right there, but you can see not much really came of it. So this ended up being just about a break-even week, only taking one partial on each of those and then stopping at break-even. But nothing wrong with that. Just surviving into the next week. Look at some of the trade submissions. Let's see, have any here, I'll refresh. Are there any questions on my trade before I get into these? I'll just hop right in here. Okay. Okay. So we'll start with Alan. So everything was pointing to a short. High time frame SIBI was hit. DXY coming off of a BISI, so you saw DXY trading higher. Thank God it's Friday. Setup yet to hit. It feels bad to take the loss, but you have to honor your stop loss and rules on the next one. Yeah, so that's fine. there's nothing wrong with the loss, and it's completely normal to take losses as long as you're following your model. You have to accept the risk in that, right? We're not always gonna see it or do it correctly, and if you followed your model, then you did what you're supposed to do. So it looks like you were looking for the London silver bullet between 3 and 4 a.m. You had your displacement lower right here, and then a little SIBI in there, getting short in there, and then taking your stop above the highs. So all good there. Nothing really to give too much commentary on. It looks like you were trading with the higher time frame bias. So I like the idea. Sometimes just the timing is not right. What was this on Friday actually? Alan, do you want to come on? Or drop a comment? Was this on Friday, Alan? Okay, so yes, it was. Okay, so Friday. Let's see if there's any other. Very good off the 5-minute chart. Between 3 and 4. Yeah, so that's fine, right? You had the right idea going here, and it looks like your trade ended up playing out at least enough for you to get the 5 or 10 handles, right? It was just the timing was off of it. So yeah, I don't think you did anything wrong here. Buy side was already purged. You had your drop right there, and then getting short in there. Yeah, totally fine. The one thing I'll look at is this. So yeah, you were already within a premium of the range as well. So I think that's all good. Just happened to not play out on that one. But look what you see here. You see the trade stops out up here, right? But then you're seeing 1, 2, 3 drives higher. 1, 2, 3, and then breaking down lower. We're outside of the range now, so you don't have your setup anymore for the silver bullet. But if you're trading as another setup other than the silver bullet, then you can potentially find your entry in here for that trade to play out. I think you did well. You respected your risk, and that's what's most important. So good going there, Alan. And on to the next one, just like you said. Ismail, this is you. Tuesday can session. We'll start with that. So got caught up in consolidation, was looking for another accumulation leg on the hourly. We never got a low time frame model, and I forced myself into trades without waiting for a model to present itself. Did not like my entries either. We never really displaced higher, and was just engineering sell side liquidity. 2 losses and 1 break even. Okay, so it looks like you are getting short in here using this old city. Or, oh, no, you were getting
No,
long.
actually, I was going long.
Oh,
And
no,
was
okay.
looking for displacement above that. Got stopped out. We took our sell side. Then we had like a little displacement. We had SMT on ES, so I went long one more time. We ran the buy stops. Just trailed my stops to break even after that. Got stopped one more time. And the last one is the worst because I chased this as a breaker before we even closed above it on a 30-second chart. And as you can see, just put my stop right below this candle that pretty much went into that and got stopped out. Just bad execution.
Yeah, no worries. I think the focus here is just to keep your focus on that higher time frame bias that can really help you a lot. So it's easy to get caught up in this action if your focus draws off of those higher time frame charts. I would suggest when you're seeing this kind of action occur, just take a step away from this for a moment and go look at your 15-minute and your hourly chart and see what's potentially developing right there. Because as we trade here, you could see this all really as just distortion, right? Because if your high is here and your low is down here, and this low hasn't been purged down here, and we haven't really had any true shift in market structure. All that's happened is just a retracement up into this range and into this inefficiency right here. So I would say it's just a bit tricky to be taking a long trade yet. I understand the idea of looking for that retracement up into this range, but otherwise, I think this was a bearish day for the most part. You look at Tuesday. Yeah, so this is what. So we had the run up in the AM and then that sharp drop off back down into some BISI in here, I think. And then just consolidating into the rest of the day, right? So you can look at this as the power of three idea too, right? We had your opening here, midnight. Anything under there is your manipulation. There's your distribution. And then you have the close of the candle, right? So you have your open, your low, your high, and your close. So unless you're expecting a deep move up into here or back above the high, it's tricky to play that after this large move has already happened and then dropping back down into the range. So I think it was just a bit of that's probably where your challenge was in there. It's just that you already have this expansion and then the drop in. Especially inside of this larger inefficiency too, is what can bring you some trouble right there. But overall, I think, I mean, you managed your risk well, right? So you had, what'd you say, two losses on break-even, but I mean, as long as you kept the losses manageable, that's fine. You can find another setup and recover in there fine. So were you getting long in this BISI as well?
I was, yeah.
Yeah, okay. All right. I'm just making sure that these are still focused on the silver bullet idea using the city. Yeah, just a consolidation hour, right? So that's kind of like the same idea for what we saw on my trades on Friday. So that's fine. Not much to do there. I would just, my only recommendation would be look to those higher time frame charts and what you're seeing there, and you may be able to avoid a bit of this kind of action, right? We'll look at what you have for Wednesday as well. Wednesday AM session, price was trading in a range on the hourly. 9:30 took out prior day high. SMT with ES. We went short in the bearish breaker with the stop right above for a 2R. We kept getting deep retracements, added one more and got out of it. Okay. So prior day high purged up here. Dropping down. Here you have your high, your low, higher high. So marking that out as the breaker. And then bearish order block right there. You've got your little civvy in here, which it looks like you're using both in confluence for your entry. That's very nice. All right, I like it. Stop. And where did you say your stop was placed? Stop right above. Okay, so stop right above the breaker.
Yeah,
Yeah,
I almost
right
got stopped
Perfect.
out on this one. The 1 minute was just too crowded, so I moved to 3 minutes. and I saw the setup and I took it. I was originally targeting the PM, but we just kept getting deep retracements, so I added one more and was staying in it for the lunch hour. So I just took it out at London sell side. It was a good trade.
Yeah, it's a nice trade. Yeah, play out nicely. I'm not sure if your timing is in New York time or not, but the only thing I'd say here is if you're looking at silver bullet setup, just make sure you're trading within that 10 to 11 window. So this is outside of the 11 window. Not to say it's still a nice setup and the trade plays out, right? But just for to avoid any confusion on silver bullet, it's between 3 and 4 a.m., 10 and 11 a.m., and 2 and 3 p.m. all New York Eastern time. Okay, but yeah, I like the trade a lot. Very nice. Use the confluence of the higher time frames, prior high being taken out. So now the buy side's been purged, you could expect to trade down into London in the sell side, and then using that breaker and the SIBI together with the order block as well. Really nice setup. I like that a lot. Well done, Ismail. And then, okay, cool. Just your trade. So yeah, nice. Look, and these were the trades you took prior, I guess, right? So these were the two losing trades and the break even.
Yeah.
Perfect example of great risk management, right? So you kept these losses very manageable and easily recovering on your winning trades. No, this is a perfect example of why losses are normal and okay, right? Because if you're doing proper risk management, then you'll be able to recover. And this is obviously you recovered it within a single trade right here, but this isn't necessary either, right? You can, it's fine and good to recover slowly and work your way out of these. But very nicely done. Well done, Ismail. Good job. I don't think we have any more submissions in here unless I missed them. If anyone would like to come on and show a trade that they did, then we can go into that. I don't have any other submissions, so I'll just quickly go into the new exercise to show you that one for this week. So exercise 10, this week the goal is to practice taking partials. We've talked about this a whole lot, how taking partials is how you get paid, and it's also what helps you build into larger trades, right? It's what helps you hold to a larger target, because it's very challenging to early on in your trading be able to take a trade and follow your bias and follow your trust in your analysis and hold all the way to your terminus. The way for you to do that is to take partials along the way and train yourself to be able to hold to that terminus, right? Maybe you take your first partial at your 5 handles, or and then you take another at 10 handles, or you take it under whatever the low-hanging fruit short-term low or short-term high is, and then you can hold a small piece of your position for the terminus, and you'll be okay with that piece stopping out at break even because it's only a tiny piece of your position. And so you slowly build on that, and then you'll get to a point where you can hold a larger piece of your trade for a larger portion of the move. But it's gradual steps, right? We're not expecting ourselves to take a large leap from just starting to hold the trade all the way to the terminus. We're allowing ourselves to grow into this and take small steps and work toward that, right? And the right way to do that with proper trade management is to take partials, take a piece of your trade off, and allow yourself to hold the rest of it, or a small piece of it, to your terminus. So this week, the goal is practicing taking partials. Taking partial profits during a trade gets you paid every time and is a necessary step in learning to hold trades for larger targets. Trade your personal model this week. So any model that you like and that you're comfortable with, the one that, your cookie cutter approach, what you see easily in the markets, that's the one that you want to trade this week. You must have at least, here's the stipulation, you must have at least 3 areas to take partials for your trade. Okay, so if you can't identify 3 points at which you could take partials, so like 2 points to take a partial and then your terminus, then then that's not the trade. But if you can identify that, then you're all good. So like here's an example. We're trading long in here. Let's say I have a low, a high, a lower low. We're trading through it. I'm using this breaker to get long in here with the stop down here. I can take my first partial here, that's 1, second partial here, and terminus above the highs. So 1, 2, 3. So if I'm learning to hold a piece of my trade, I'm only going to hold a small piece for up here. So maybe I would take half the trade off here, 80% off by this point, and my last piece for up here. Does that make sense? You know, having the opportunity to take at least 3 partials to a terminus. So for a total of 3, right? So 2 partials and then your terminus. Please note this will likely require you to trade micro contracts instead of the mini in order to maintain proper risk management and have at least a 3 contract position. Okay, so totally fine to trade the micros. If you normally trade 1 mini, then you could trade 10 micros. It's the same risk amount, and that will give you enough of a position to be able to take those 3 partials. Please outline your setup on your screenshot and journal submission. Include all the usual things if you're trading with the higher time frame bias, what time frame you trade, what you're targeting. Use the same balance from week 9. It's great to see everyone continuing to share their growth through that, and you can see a lot through your trade history. So it's important to keep that. It's part of your journal, and it's part of being able to see your growth and being able to see that you can recover from losses. It helps you work away from any fear around a losing trade, right? Because you can see your history of, yes, I had losing trades, but I was able to recover from that when I had the winning trades. Okay. And that's it. Okay, so goals, take 3 partials, 2 partials and 1 terminus. You're welcome to take more partials if you want. Any day is available for trading. Just don't trade ahead of or into red folder news. And then our usual risk parameters here. So 2 trades max for the week, 0.5% if you're in profit, and 0.25% if you're in drawdown. If your first trade is a winner, then stop. And if you go break even or lose your first trade, then you can risk 0.25% again if you like. So no more than 2 trades for the week. Okay. And we're targeting a specific 4-hour or 1-hour liquidity pool or inefficiency. These are the minimums. So these are a great place to take your first partial if you like. You don't have to necessarily take it in an inefficiency or above an old high or below an old low. If you get those 5 handles on ES, then boom, that's a great place to go ahead and take your first partial. Moving to break evens is welcome, and of course always use a stop loss. And just make sure to include these things in your journal, and this is where you can make your submission. So you'll go to the community forum, make sure you have an account in First Hand Social, and you'll have access to the members page. Go into the forum, then you'll go into training exercises, click on exercise 10. You got the details for the task here, and when you do it, you can come in, type out your journal, click the add image button right here, and put your screenshots in there, and then just publish. Okay, and then we'll review on next week. That's pretty much it on my end. I'm happy to go over any questions or charting things or trades. If anyone wants to come on and share anything, welcome to do that. Otherwise, the floor is yours. And,
I have a
Any
question for you, Henry.
yeah, go ahead.
Obviously, as you said earlier, because of what's going on around the world, and anything can happen. What are some of your, like, the rules of participation that you're looking to define high probability conditions in today's market and in your general? I see a lot of times you and Carson just don't trade early in the week. Sometimes you do, but most of the time, like you stay late. But a lot of the times when we get like classic expansion, weekly profiles, the main moves happen between, I want to say Monday and Wednesday, and then maybe get the TGIF. So what are some rules that you can share with us that you look forward to before you even step in, like just to define high probability?
Yeah. A lot of it is just having the, like, I'd say one of the best things you can look for is just having your very clear and obvious draw on the higher time frames. And then as you get into the intraday charts, you want to trade when they're, like we talked about earlier with Ranjan's question, when you have an obvious inverse correlation with the dollar and the indices. Those are going to be your high probability setups. When, let's say, dollar has a very clear draw higher, ES or NASDAQ has a very clear draw lower, and then you can find an intraday setup when both of those, dollar and the indices, are moving toward that target. So that's when I like to trade, when it's very obvious. I think it's important to remember you don't need to trade every single day, and you only need really one good setup in a week to be able to make your whole week. So I think it comes down a lot to being patient and being willing to trade less and be more selective with your setups. So wait for those opportunities when there's the obvious draw, the obvious inverse correlation with DXY and the indices, and then wait for your model to be present. Right? If your model isn't there, then there's no trade opportunity, and so that'll keep you out of a lot of the lower probability opportunities, and it'll keep you focused on trading only when your specific model is present. I think it's important too to have that defined model, right? If you don't have something defined, if you don't know what you're looking for, then it's going to be much easier to participate when you shouldn't. So I'd suggest everyone write out, take a pad and paper and write out what the rules for your model are. Like if you want to trade the silver bullet, for example, let's say you trade between 10 and 11 a.m., then put on your rule set, trade. I'm going to trade between 10 and 11 a.m. I'm going to trade the silver bullet setup, write what the silver bullet is. So you're trading as price trades into a fair value gap between 10 and 11 a.m. And I have an obvious 15-minute or 1 hour draw on liquidity in the same direction as my daily or weekly higher time frame bias, then that defines your model, right? And when you have that defined, then you have specific criteria. So only if those things are being met do you have a trade. And you can include in that too that you want to see an opposing draw for dollar. That will give you an even higher time frame, or even a higher level of confidence to set you up for high quality trades. That pretty much covers in terms of high probability opportunities. You can look for things too, like if you look at all the time frames are fractal, right? So the same things that you can see on a daily chart, you can see on it a 4 hour, an hourly, a 15-minute, a 5-minute, a 1 minute, a 5-second chart if you want. So you can start to see different structural things that help you identify setups that are going to work more smoothly as well. So I'll share my screen again, and we can talk about some of these things. So if you're looking at, I like to trade a lot within market maker buy and sell models. And like just looking at this chart alone on the daily chart, you could see what appears as a market maker sell model, right? If we are going to trade lower down into this area down here. So you'd have your original consolidation, You have your accumulation, your smart money reversal up here, then you'd have your low risk sell distribution, and you could have a redistribution occurred to drop down into the original consolidation lows down here. So the second leg in the market maker buyer sell model is always going to be that low resistance liquidity run. That's really what we're looking for when we want high probability opportunities. Low resistance means that it's going to snap right to it, right? It's going to move quickly. It's not going to hang out a lot like you're seeing in here and in here in the early part, or in this action up here. It's going to move fast down into it, like you see on these days right here. As we break away from this first distribution right here, dropping through, and then we can have redistribution occurring down here. And as we break through these lows, you could expect price to move quickly down here. So in this area, as we trade down into here, this is where you can potentially look for those setups that will occur that move quickly down in here. Right? This is a daily chart, so in that sense, you would be swing trading if you're holding it down there. But like I said, time is fractal, so you can see the same things occur on the lower time frames. Like, let me look into a 1 minute chart. We'll find a good example. Friday. Let me actually open another thing so I can. Yes. Okay. Here is. All right, it's Friday. Here's our sell model. Right. So here are the lows of your consolidation. That's going to be the terminus down there. You have your original consolidation occurring here. You have your accumulation up here. Here is your smart money reversal. This area is like your low risk sell. In here. And you have
That area which you pointed out as low risk sell, like how much stop loss will you give for that low risk sell? Like high of that whole dealing range, or just some PD array? Because there's no real FVG. It's back to its total balance price area.
If you go on a different time frame, you might be able to identify fair value gap in here. Let me look on the 5, 4, 3, 2. Yeah, so nothing super clear there. But here on the 1 minute, it depends on what your model is, but you could look at this as like here. That's a breaker on the 5 minute. So you could even trade something like this, like this price trades up into here, merging these highs, getting short in here with the stop just above the breaker. Or if you use the 2 consecutive candles, you could take a trade like that. Okay. So you'd be getting short right here. Your stop loss would be above the breaker, and then you could target the original consolidation lows, something like that. But it's fine to put your stop loss up here if you're more comfortable with that. It's just a matter of when you understand the structure and the PD arrays, then you're able to refine that stop loss, because if price trades back above here, then that potentially negates this idea of trading down here. So you wouldn't want to still be in the trade, because you could see price trade above here and then use this as inversion to trade up here, and then the trade is already wrong at that point, and then you'd just be allowing extra risk. But initially, it's fine to take that approach, because if it makes you more comfortable in the trade and putting on the trade, then that's an important learning step, right? We're taking all these small steps instead of these large leaps. You don't have to put the stop there right away. You can start by taking the trade like this with your stop up here and just size your trade appropriately to allow that kind of risk, right? Like if you're trading a mini with your stop right here for only 4 handles, if you're now risking 14 handles on it, you'd need to trade only like 3 micros instead. But that's fine. There's nothing wrong with taking smaller size. You just need to adjust your size according to your stop loss and the risk that you are okay with having on the trade. So that's how I would trade that one.
Yeah,
using the breaker.
that's a very good insight. One thing I notice all the time in the MMXM model is there's always like a breakaway gap. So here also on that 5-minute, you see, there's a FVG which it never returns to. And, my struggle or pain point is, I draw that, that swing high, swing low, OTE, and then I wait for an entry on that FVG, like the 5-minute FVG to get short, but it never returns to the OTE. Many times I've seen this repeat. So, I mean, in these cases where there's a breakaway gap, like you explained here, getting in the breaker itself so that you don't miss the opportunity. Are there other ways you can just, you see that breakaway gap and you just mark it in and, it's anyway you're joining the order flow, or that's not a good practice?
I think it's important to not get in the practice of chasing price. So ideally, if your intention is to get short and target the sell side, you want to be doing so when price is trading opposite to that, right? So you don't want to be getting short when we're moving lower. You want to be getting short when we're moving higher. So this is a good opportunity to do that right here. When you are expecting a breaker to form, so for example, this is I guess a little bit more of advanced concept, but when you're expecting the breaker to form, you don't actually need closure below it and to tap back into it in order to have a trade. The breaker is the area where positions are accumulated inside of this range. So if price is already trading in here, you can find a setup in here before price has closed below and traded back into it to take that short. So let me drop into a 1-minute, like we see right here, for example. Right, this is the breaker on the 5-minute. On the 5-minute chart, you haven't gotten any closure yet, but here you have a little civvy, and that's actually your silver bullet setup right there. So you can be getting short right in there. Your stop loss up above this high. And then you have to sit through this retracement right here. But as long as you keep your stop placed appropriately, then that's fine. The one thing you don't want to do is you don't want to chase something like this. Like this is the news release here, consumer sentiment. And as you see this drop down, potentially forming your SIBI up there, you don't want to be selling this right here, because this puts you in a position of your risk is higher than it needs to be, because now what is protecting you on this trade? If we don't see any of this and we only see this down close candle right here, so pretend this is like like that. You have your breaker idea, sure, but this is just the news release, and what's telling you that this is not just a run on stops before moving higher? There's nothing to protect you yet, and so you'd have to look to previous arrays, like looking at this as an up close candle. And so now the only place to put your stop on a position like this, if you're selling all the way down here, is all the way up here. And so your risk is really wide, right? But if you wait for the opportunity to sell when you get a retracement, like here, this is trading up into a volume imbalance. If you're on a seconds chart, like a 15-second chart, you may actually see a short entry in here. And then you see this moving lower, right? We have an up close candle here, showing respect for that there, then creating the city. Now we have an idea that this is trading lower. We can look at this as a breaker. We have that city in here, and this price trades back into it. Now you can get short with more appropriate risk, right? Because now you're shorting in a premium rate as price is moving against you. That's when you're not chasing price, because we're looking for lower prices. We want to be selling as price is moving higher. And now you could safely put your stop here, which is above an old swing, above the breaker, and above the mean threshold of this order block. So you have 3 PD arrays that are separating your entry from your stop loss. Okay, and then you can target power down there. The one thing I'll say with the breakaway gap and not seeing your OTE entry trade is when you have certain things in market structure occur, you may not always see that OTE. Like this is a great example with the breaker. Oftentimes when you see a gap form and then you see price close below the breaker before trading into the gap, you can anticipate that this will be a breakaway gap. It's likely to not trade up into here since you already have gotten the closure below the breaker. Beforehand, we're not seeing closure, and so you could expect this to trade. But after you see it close below the breaker right here on this candle, now I would anticipate this to be a breakaway gap. So I'd be comfortable entering on the return to it with my stop above the breaker, or even right here, because I'm expecting that this will not trade. But if you, like I was saying with the stops before, if that's not something that you're comfortable with and you want to have a wider stop on your trade and allow for that OTE to occur if it is going to, then let's say you're looking for the OTE right here. So you're expecting price to trade up into here. But you see this model, then you can take your entry on the return to the breaker and just put your stop up here. And you would just need to size your position to allow for that, right? Like just when I was showing my my trade example earlier, I said that we had 2 cities, right? I didn't position size to just put my stop above the first city because I have to allow for the higher one to trade. And so I sized my position to allow a stop above both. And so if you're looking at this like I may get the OTE trade, then you could size your position to just allow a stop so that the OTE could still occur, right? But this is where you'll want to take your entry, because just like when you have 2 cities, you still enter in the first one, right? Because you may not get the second one. Does that make sense?
Yeah.
And these are things that you just start to see through time and experience, right? Like this is I wouldn't expect that anybody would see this as a breakaway gap until learning the idea that if you get the closure below, you may not see this trade. And so it's totally fine to want that OTE, and you're being good and selective by wanting that as well. If that's your model to trade the OTE, then you just don't have a trade here, and there's nothing wrong with that. You just wait till when you do have one, right? And you don't have to have any feelings of, I missed out on this move, I could have gotten in, you know, look at all the opportunity that I missed, whatever. None of that matters because it wasn't your trade. It wasn't your model. And you're doing the right thing by not taking a trade and following your model versus chasing price out of emotion.
Thanks for explaining. Appreciate it.
Yeah, you're welcome. I'll get back to what Ismail was saying. I just want to touch on this last thing. So note your distribution and your redistribution down here. You see how this leg of the price action, the distribution, and then the second stage of redistribution, see how we move very quickly off of that? And it's a fast run down into sell side. Like there's not a lot of hold up. As soon as we break the low, just dropping right back down. And then here in that initial distribution up here, we're just tapping up into a breaker right here and then moving away very quickly. These are the structures that I like to look for. When we're already down into, we're already below 50% of the range, right? So between the low and the high, I'll put on my trend so you can see. Here's the market maker sell model. We've got the low and the high. We're already below 50% of the range. Now I can expect that this is like if I'm expecting this to be the full range, then this is where I would really want to be a seller at, right? We've already had the closure below the equilibrium. We're trading up into the breaker. You can sell that and expect that this is going to move quickly. You can see the same thing occur on a daily chart. So like here, if we're looking at this as the low and this as the high, then what do you see here? We've had the closure below equilibrium, trading back up into equilibrium, and then trading into city and this mitigation block here. And we could potentially move very quickly down toward these lows if we're going to draw there. And so it's within this range that now I can start to expect potential higher probability opportunities that are going to move fast toward the target. And you'll see the same thing on intraday charts, right? Within these daily candles. And so you can look at these structures on a higher time frame and identify when you're likely to have the best setups on the higher time frame, and those will translate into the best setups on the lower time frame. Like it's a lot trickier to be trading the lower time frame in here than it is in here, or if we have a sharp move off like this. Look into this action right here and try and find setups on the lower time frame. It'll be very easy to spot. Let's see if that lets me go back to it. Right? So the order block drops down. City, sell, city, sell. And look how fast it moves. Right? And so I'm looking for structures on the higher time frame that would translate into what I want to see on the lower time frame. So this model, this market maker sell model, just like you can see that the better opportunities happening here in the distribution and the redistribution to move quickly down to here, That's where I want to be a trader. In here and in here, reaching down into there. Not as much in here, right? And so imagine this as a daily chart. Would you want to be a trader in here, or would you want to be a trader right here? You'd want to be a trader in this, where it's moving smoothly. And so you're looking for these signatures to develop on a higher time frame. And when you're seeing that happen on the higher time frame, then you can go into your lower time frame charts and look for these opportunities to occur there. And those are going to be your higher probability opportunities. The last thing I'd say just around this topic of finding good opportunities and how to adjust risk and things during these times is, well, first of all, there's nothing wrong with trading Mondays necessarily, but Mondays are typically where you're going to see consolidation earlier in the week, just because if you think about power 3 concepts, where we have accumulation, then manipulation, and then your distribution, if you're looking at that in terms of a weekly profile and just the timing of it, if you're going to have accumulation first, you're likely going to see that at the beginning of the week. And so first day of the week, Monday, we can expect the accumulation to occur. Then we could expect on Tuesday or Wednesday, most of the time, because I think Michael says like 70% of the time you have a low or high of the week form on Monday or Tuesday. And so we can expect that manipulation part of the power 3 to be occurring right there to form the higher low of the week on Monday and Tuesday, and then the distribution to occur into the rest of the week, right? So use those weekly profiles to help you determine when you're likely to see the move that you're looking for. And you can avoid Mondays most of the time because of the likely fact that it's going to be just the accumulation stage of the weekly profile. But one thing that Michael says too is the time that you do want to trade Mondays is during an NFP week. If there's NFP, then trading on Monday, a lot of times you'll see good movement on the Monday. Otherwise, Mondays are typically just that accumulation. So that touches on higher probability setups. The last thing I'll say just in terms of risk is when there's likely to be a lot of manual manipulation in the markets and you can expect more uncertainty, the best thing that you can possibly do is reduce your risk. And so if you're usually trading, let's say a 0.5% position, then during these times of heightened volatility and uncertainty, it would be wise to drop down to, let's say, 0.25% risk on your trades. And so you don't have to be fearful of a potential moving against you and sweeping through your stop or something like that, because when there's an uncertainty in the market, it's hard to even talk about these things because it's not easy to comprehend without actually seeing it happen. But on any candle, something could happen in the world, and the next candle could literally gap up like 20 or 30 handles or gap down 20 or 30 handles. And if your stop loss is placed somewhere, there's not going to be any respect for your stop loss if something like that happens. And so that's why putting the proper leverage on your trades is so important, because if you're over leveraged on a position or if you have too much risk on, especially during times of uncertainty, if something like that happens, it can completely wipe out your account or your funded account or whatever you're trading with on an unexpected move. And so you have to just be conscious of the potential risk of that, and you need to size your positions appropriately for that. So when there's elevated volatility and uncertainty, then the best thing to do is just size down. And you can still make good profits too with reduced size, right? There's no need to trade 2 or 3 or 4% of your account on a trade. Trading 0.5% or 0.25% is plenty to participate in good moves and make nice profit. I always say too, the goal should be acquiring more capital. If you want to make larger profits, the goal should be to have more capital, not to have larger percentage wins, because then your focus is still on maintaining proper risk management and supporting the longevity of your account versus trying to run it up. And like all these small account challenges and things like that you see online, like people trying to take $1,000 and run it into 100,000. It's not realistic to do that. You can do that over an extended period of time by just doing really small steps, like trade with a micro and do that for months and months and months and slowly build your account up, and then you'll be able to compound it over time. But trading with a small account and trading with high leverage and then trying to compound the account that way is just not the right way to do it. It's not appropriate risk management, and by doing that kind of thing, you'll cause scar tissue and you'll scare yourself out of being in this and learning the right way over a long time. Because if you trade with a really small account, let's say you have $1,000 account and you're trying to trade a mini on it, like some of the discount brokers will allow you to do, if your risk is 5 handles on a trade, that's $250, and if you take a losing trade, that's 25% risk on your account. That's unacceptable to put that kind of risk on. And so you either need to trade a lot smaller, or the focus needs to be on acquiring more capital, right? Because you can get to a point where you can do some of these funded accounts if you want and get $100,000 account or something. It's not actually 100,000, but the risk is a little higher. Then you can risk 0.5% on the account, just like we're doing on our paper trading accounts. If you have $100,000 in the account, with your leverage and all, and you still only risk 0.5%, that's a $500 risk on the account. I don't know anyone who would complain about having a 1-to-1 trade and making $500, or a 2-to-1 trade and making $1,000 on a trade. Like 0.5% is plenty of risk when you have the right capital behind you. So put the focus on keeping your risk management tight, trading with the smallest leverage that you can do, and then just keep the focus on, if you want to work toward larger profits, then keep the focus on getting more capital behind you, not trying to put more risk on the trade. So I hope that touches on all that. Ismail, you can let me know if I answered your question well, or if there's something else you want me to touch on. Axel said, scar tissue is real. It took months to get over that fear when trying to use high leverage on a small account. Yeah, it's totally real. It'll shock you, and it'll scare you away, and that's not what we want, right? Focus on the small steps, allow things to compound over time, and that will take you very far. Ron John said, totally agree, Axel. I'm still dealing with that as we speak. I've got 10 PAs. I knew to take a payout last 8 months. I've gone down to 1 micro to come out of drawdown. That's perfect. You're doing the right thing, Ron John. I know that's not like it's not a fun process to be working at a drawdown, but that's gonna give you so much confidence when you do that. That's gonna give you so much confidence to know that you were in that and that you did the right things and were able to work out of it slowly and surely. And when you're out of it and then you experience drawdown in the future, that's not going to frighten you at all. You're going to think this is totally normal, and I've been here before, and I know what to do, and you'll be able to work out of it, no problem. Axel said, remember, hedge funds try to make 15% a year. You make 0.5 to 1% of the trade. Yeah. So that's an incredible return. If you get enough capital, right? If you get, I mean, on $1 million, 15% a year is $150,000. So you don't have to make these insane returns. The capital behind you is more important. Anyone else have any questions? I won't keep everyone too long on this Sunday if we don't have any more questions, but I'm happy to answer anything. I'll stick around for a while, take questions, or if you want to show any charts. Thanks, Axel. All right. Well, let me know if anyone has anything else. Otherwise, we'll go ahead and close it off. Any last thoughts? Good, thank you. Okay. All right, we'll go ahead and close it off for this Sunday then. Enjoy the rest of your weekend. Be safe in the markets this week. Just be conscious of the volatility and risk right now, and stay safe. You know, risk management is paramount, so keep that in the top of your mind. Make sure that's your focus, and good luck on the training exercise. If you do it this week, make sure to get your submissions in there, and I will look forward to talking with y'all in the midweek review on Wednesday. All right, take care, everyone.